afternoon, everybody. Welcome to our Selecting an Option Strategy webcast. I'm Connie Hill. Happy that you join me here today as we get together at this time, typically every week, to discuss selecting an option strategy. Now, I do want to let you know that time is going to be changing for this class starting next week. Instead of meeting on Tuesdays at this time for Eastern Time, we will start meeting on Thursdays at 4 p.m. Eastern Time. Okay, so I just want to let you be aware of that particular change. Last week, somebody chatted in a question at the end of our session that I didn't have a chance to answer, that I thought maybe we might use as our discussion springboard here today, and that is, how many indicators do you need to line up on a chart in order to feel comfortable with pulling the trigger? Okay, so I want you to answer that yourself. Feel free to chat it in as well. How many indicators do you feel like you need to see on a chart before you feel comfortable pulling the trigger? Could be not very many, it could be a lot. All right, we'll get into that here today. Now, I hope you're following me on X. I'm Connie Hill CS, and I'll post educational content throughout the day. Things that I think you might find interesting, I'll post about. Cameron May is in our chat today. I'm glad Cameron's here. He's a great veteran of the market and very knowledgeable in all the things that we're talking about here today. So if you have some questions, go ahead and chat those in. Cameron would love your follow as well on X, Cameron May CS. And I'll be keeping my eye on the chat here as well. I'm interested to see what you think about how many indicators you need to see line up before you're ready to pull the trigger. All right, let's go through our disclosures and get into our agenda here today. Options carry a high level of risk and are not suitable for all investors. What we talk about today is for information and educational purposes only. Don't consider it a recommendation. We'll be using the Paper Money software application. It's for educational purposes only. I think it's a fantastic tool to try out your strategies, try out particular rules as you're fine-tuning those, and as well as learning strategies. Investing involves risk, including the loss of principal. Past performance of any security or strategy does not guarantee future results or success. Short options can be assigned at any time up to expiration, regardless of the in-the-money amount. Although an in-the-money option has a higher risk of being assigned early, Paper Money does not do that functionality. It does not assign early. So when we've had situations in our class when there's a possibility we could have been assigned early, I try to point that out to you. There is no guarantee that execution of a stop order will be at or near a stop price. Once they get activated, they just compete with other incoming market orders. Now, typically in this class, we'll take a look at the market, kind of see what's going on and get a feel for what strategies we think might be most appealing and might work the best in the environment that we're in. Now, I'm going to see what your answers were. Servina says 0. You need 0 to feel 0 things to line up on your chart to feel comfortable pulling the trigger. Greg says, well, it kind of depends on the strategy. Okay, that very well could be the case. Ted says 1 or 2. The more you use, the worse your results. I might say the more confused a person might be as well. If you're trying to get 5 things to line up, man, it might take forever to get a signal for you. Let's see. Taylor says not many. Will says 2. JD says hi. Taylor says mainly price, meaning that's where your focus is. You're looking at price action. Maybe you're looking for bounces off support and you see that, or maybe you're looking for a close above the high of the low day or something of that nature. And maybe you're focused solely on price. Price is king. All right. I appreciate that feedback, you guys. And it's interesting. Serena also says you like the volume profile alone. Okay, so you like to use that as well. Let's see. Greg says, I like Cameron's TVM setup. Time volatility. Is that time volatility? And I don't know what the M would be for. Movement? Not sure. All right. Let's take a look real quick at our market conditions, what's going on. And just have the SPX up here. And I have on 3 different, actually 4 different studies on the screen. We may refer to them and we may use them exclusively together. Some of you are really familiar with James's whole 10-20 moving average system. And so that's kind of what I'm showing here, that particular system. Also a MACD and also implied volatility. All right. Implied volatility might not necessarily be a signal that you're looking for on the chart, but it might be more representative of just letting you know where implied volatility is, so you know if you maybe want to consider this strategy or that strategy. Okay, so SPX was down a little bit today, but then towards the the last half, half the day, started to rally. It looks like we ended up being here up about 0.41%, so not too shabby. On the NASDAQ, similar type story. Looks like it ended up being up about 0.29%. As far as these moving averages go, looks like the NDX is above our 10, but not above the 20 whole moving average. Looks like the MACD rolled up. It didn't cross the zero line, but it is rolling that direction. We have 2 days of price rolling that direction. On SPX, I didn't tell you what this was. MACD's rolling up as well, and it closed above both those moving averages, the 10 and the 20 whole moving averages. Okay, how about the VIX? If we see the markets up a little bit, are we going to expect a big change in the VIX? Maybe not a huge change, okay? But maybe VIX down a little bit since the markets went up. And it does look like, it looks like here, I'm actually seeing it up a little bit, 0.37%, which is not that much on the VIX. Okay. Now, generally speaking, would you say volatility is higher or lower? For what we're seeing right now, would we say maybe it's higher or lower? Well, when we look at a 1-year time frame, we might go, oh, it's puny. Yeah, it spiked a couple of different times throughout this last 1-year cycle. But right now, it's just kind of in an area that we would generally consider lower. And when it pops up, then if the VIX goes up, then we expect some negativity, some bearishness, some defensiveness on our indexes. Yeah. Greg says, I like James Whole Cloud pair also. A couple of more responses here. Greg says the trend, the value, the momentum. You're letting me know what the TVM is for. Perfect. Appreciate that. Robert's letting me know that as well. Given these factors, would you say that you're expecting big moves or small moves in the market? And which direction might you be expecting them to go? Would you expect big moves, small moves? You can just tell your computer screen or your dog. Just kind of answer it to yourself, because then we go back to our strategies and say, okay, which of these seem to make sense? All right, so we have not done a lot of bearish strategies. The market really hasn't been that conducive to it, right? So we haven't done a lot in this area. We have, through the last year, done a lot of the bullish strategies, and some of them are more strongly bullish than others. Some of them are slightly bullish, like a short put vertical might be slightly bullish. A call diagonal spread might be slightly bullish. Synthetic stock, where we're selling a put and buying a call, is very bullish. So your stock, you want to be very bullish. You want your market to be very bullish as well. And so it just kind of depends on what you're seeing in your perception, how you're interpreting what's going on in the market, to identify, well, what strategies might we use? Now, we had a period of time when the market was pulling back a little bit where we explored, say, iron condors. We explored that strategy. We've spent a little bit of time on calendar spreads. But for the most part, we've kind of stuck with our bread and butter strategies on that first column. JD says when the VIX is 16 plus, I would say it's time to maybe go neutral / bearish instead of being completely bullish. Yeah, you might have an area where you might want to consider kind of deciding, okay, if it is above X, JD is saying if it's above 16 or more, then he is more likely to be bearish to neutral. And you could do that too. When the VIX gets, let's go back here. When the VIX, oh, I did not mean to do that. Scrud. I'm going to have to rebuild this. On the VIX, yeah, if it gets up to maybe, 16, 17, you're starting to see more, a little bit more volatility in the market. I would say it's not really, I'm going to put this in quotes, scary or nervous or extreme. If it gets to maybe about 1920, then we're feeling it a little bit more. We're seeing the results of that a little bit more. Down at, say, 16, 17 might be the beginnings of us noticing maybe more volatility appearing, option premiums being more pricey because of that increased volatility. And also, of course, the implied volatility of your stock. So let me go back and rebuild what I had, because I did not mean to select on that little icon that brought up that style. And let me just add back on what I had here. So we had implied volatility. And so I'm going to put that back in here along with our MACD. And we have the whole moving averages. And then I like to see the volume. It can be really helpful to see when we're looking for breakout scenarios, right? Oh, is there a lot of volume here on this breakout or not? And on the volume, the default here is at 50. I'll change it to 20 or 30. We're looking at a little bit shorter time frames, generally speaking, in this class, okay? And then I'll adjust this average to be a size of 3 so we can see that a little bit more easily. Okay, now we've got our chart back the way I wanted to use it here today. Okay. Given this, what do you think? Are you feeling mildly bullish, strongly bullish, mildly bearish, neutral? Tell me, based on just kind of going through what we were seeing on the charts, what do you think? All right. Bruce says put a 9-day moving average band on a 1-month time frame, 1 hour. Okay, so Bruce maybe is looking at something quite a bit shorter term than maybe what some of you others are. Maybe he's looking for some really quick signals, some really quick turnaround time in trades, maybe some very short-term swing trading, as opposed to maybe, say, putting on a vertical that you're say a short vertical, you're content to let it work for a while and you're going to be patient with it. Okay, so got several neutrals in here, a bullish. Let's see, Scott says neutral, but it might spike up tomorrow, right? We never know. Obviously from day to day. Robert's a little bit more on the bearish side of things. Okay, so we can take the information, we can interpret it maybe a little bit differently from one to another. It doesn't mean somebody's right or somebody's wrong. But it looks like a lot of you are kind of falling into the neutral camp instead of strongly bullish or even slightly bullish. Okay, if that's the case, what strategies do you think you're going to lean towards? Okay, so if we're not strong, we probably are not going to look at long calls or long puts, but we might consider doing something that's more in the verticals. Long call vertical, short put vertical. Yeah, we might tend towards some of those, or some neutral strategies, maybe doing an iron condor where we're doing a short put vertical and a short call vertical on something that maybe is range bound. And sometimes we'll start to see those types of indicators. Okay, so Jayton says, these days market runs on news and not even fundamental. I want to say the news is always pertinent to what's going on in the market. And stocks can react quite a bit to the news. I would agree with you there. I think people will also use fundamentals too, though, right? Companies come out saying, hey, this is what we think we're going to do next quarter, or here's our guidance for the rest of the year, right? Taking that in consideration to some of these daily news items. And sometimes people might consider the news a little bit staticky, maybe causing a little bit of whipsaw. But man, news is what makes the markets move. Yeah. All right. Let's see. JD says iron condor, short put vertical, says Greg. Bill slightly bullish. JD might consider doing a butterfly. JD might consider doing a double diagonal. Now, for the most part, I will not get into those advanced option strategies in this class because we have a separate class really dedicated to those strategies like double calendars, double diagonals. And so we don't do those a lot in this class. However, you could be completely valid on that point, okay? All right, now I'm noticing a survey out in the chat already, okay? You guys know from time to time we'll put out a survey. Cameron and I don't control when that survey comes out. We just watch for it, okay? And so it looks like there's a survey out there. And so what we like to do is just take your pulse on a scale of 1 to 10. How do you feel? First radio button, second radio button, go ahead, click, click. Then there's 2 questions you can answer if you want to do that too. Or you can use it to communicate something to me. For example, hey, I'm really struggling with this strategy, or I'm struggling with this concept, or I'm struggling with entries or exits, or whatever it might be. Feel free to use that space to communicate that to me as well. Now, I wouldn't fill the survey out necessarily quite yet, but if you click on that link, then it'll be active. And when it's time for you to go, or we wrap up our session, then go ahead and fill the survey out. We really appreciate you taking the time to do that. Anything that you put in, I will read, our managers will read. We pay attention to it, okay, what the feedback is. Let's review just a couple of trades that, quite honestly, are just still needing time to work. Let's jump up here. And this is the 2 trades that we have ongoing right now in our class. We've got a short put vertical on Eli Lilly. We've still got 17 days, and it made a big move for us today. It actually took us from being in a negative position to a positive. You can see today, you can see up 540. Let's go take a quick look at the chart, noting that we're short the 740 put, so we would love Lilly to stay above 740. That would be most ideal for us. So we can see it's was kind of neutral for a little bit of time, bottomed out here at 620, and then it started making higher highs and higher lows. And we got in just as it was crossing above, say, the whole moving averages on this day here a couple of weeks ago. Well, right after we got in, what did it do? It pulled back. It went down below our 740 strike price here, but there was an area of support down here about 720, so we didn't really panic. We thought, well, let's see if support acts as support. And it just kind of been hanging out here. And then, of course, the big move that it had today. Now, I didn't check the news to see what that was, but now it's back in a good position where we can say, all right, let's see if it can stay above 740. Right now, it's at 763. So it's got $23 of leeway. We've got 17 days. So this is one of those trades that's like we need to exercise a little bit of patience in order. We're just going to let it work. The other one was Roku. On Roku, we did something that requires a little bit more movement. We did a long call vertical. It expires October 17th as well. We got in here, and when we got in, we said, well, it doesn't need to move a whole lot to get to 100. And it did. It moved above 100, went a little bit below, kind of hanging around there right now in that area. And so we're just going to let it work as well. Give it an opportunity to do that, but we also have orders for both of those. If we get a significant portion of the gains in the trade, we're not going to hold out for 100%, but we will get out if we get like 60 or 70 or 80% of the max gain. We've got those orders sitting there ready to go. Now, one question that somebody asked that I'll just show you real quick on last week, towards the end, didn't have a chance to answer it, said, what happened on our UNH trade? Okay, so here's our UNH trade, and we got in here, and I believe this one was a long call vertical. And it really, we were looking at it here on this day, got in on the next day, Wednesday morning, and it only ran for 2 days before it hit our target on that. And interestingly enough, we got some really good pricing on it. Now, sometimes your paper money account is nicer to you than the live market. Okay, so I want to point that out. We were looking to get into this long call vertical for 205. Well, actually, we were looking to get in at 238, but we got in at 205. So it filled it as a nicer price. We were willing to get out when it went up to 421. Went up higher than that, we got filled at 460. Now, that is very optimistic. Okay, I would say these maybe paper money was a little too nice to us, but also the stock adjusted the next day as well. Okay, in any case, we had this order sitting out there to say, hey, take partial profits. We get 60, 70, 80%, take it, get us out of the trade. And I don't feel bad about those kind of trades at all. I don't miss them. I'm like, sweet. We're in the trade for 3 days and we hit our target, boom, we're out. Okay, so I think that was, now I forgot who it was that asked that, but if you asked that and you were wondering, that's what happened on that trade. Now let's take a look here at a couple of stocks that have been moving pretty well. GE Aerospace has been one that's been trending really nicely. In fact, there's one other thing I wanted to put on here, and that is performance labels. Labels, let's see. What did I call them? I think I called them performance. Let's go ahead and see if that looks right. Kind of showing the performance of the stock. So year to date, it's up 62%. So has it been moving really nice? Yeah, it's had a really good 9 months, hasn't it? Month to date, it's up 9.3%. So what we're seeing on this is it's just had a nice little run up, had a little pullback. Boom, today, what's it doing? It's just kind of like looking like it's bouncing at support. Okay. I don't have that line drawn in yet, but I could see possibly maybe this area here, kind of a range where it's resistance and then acting as support here. So I might look at that and say, oh, we've got a close above the high of the low day. We could use that signal as well. Now, in talking about multiple signals on the chart, some of you may feel comfortable only using price. Some of you might feel comfortable using price and moving averages. Like the whole moving averages here, the whole moving average, it compared to, say, a regular simple moving average, is a lot more sensitive. Okay, that means it can give us signals quicker. It could also potentially lead to whipsaws because it is such a quick signal. That's why it's important to paper trade and make sure you feel really comfortable with what you're looking for a signal. Now, some people might say, well, I also want to see a momentum indicator indicating something. Okay, so we have the MACD here, and today it rolled up. However, some indicators, actually most indicators, are a computation of past price. Some of them include volume, but past price. So many times they're lagging. And that's why these whole indicators might be appealing to some people, because they're a faster calculation than, say, a simple moving average or even an exponential moving average. You could throw out, say, like a whole 10, a whole SMA, a whole exponential moving average. You can look at them all together and you'll see most of the time that whole is going to be faster. Okay. Now, some of you may say, well, do I have to see it above a moving average and the MACD rolling up? No, you get to decide how much evidence you want to see on the screen. If you're doing shorter term type trades like swing trades, you might be more interested in just looking at candles and price action rather than waiting for an indicator that lags a little bit. If you're somebody that maybe is doing some intermediate trading, maybe you're doing some trend trading, maybe you're doing some option strategies that go out a little bit further in time than, say, what a swing trade might, then you might want to have some additional indicators, but you get to decide what that is and how many you want to see. I would say too many will slow you down. too many that you're waiting to all of them agree on the very same day, you might miss a signal because you're waiting so long for that confirmation. But if you're doing something longer term, you might go, yeah, I want that confirmation. Okay. So just wanted to have a little bit of a discussion on that. Okay. So GE Aerospace, defensive, what would we call this? Let's go to the Analyze tab real quick. Produces commercial defense aircraft engines, integrated engine components, electrical power is kind of what these guys are in the business of. Do you think our defense aircraft engines are going to be in high demand right now? If you think so, yeah, you might be interested in this. I'm also going to pull this up on a watch list so that you can see the 1 month performance of this stock and the 3 month performance. Okay. 1 month, it's up 9.23%. 3 months is up 21%. So would you say this stock is moving along? And I'd say, yeah, this one's moving along at a pretty decent clip. You annualize, say 21%, then you're looking at what, in the neighborhood of about 84% for a year. Not that it's guaranteed to do in a year what it's done over the last 3 months, but you annualize it and you're like, yeah, that's pretty hefty movement on that stock. All right, let's look at next implied volatility. Priced into the options here, about 36, 35%, depending on which ones you're looking at. That probably falls in the range of just maybe going from medium to high. Around 35% and above is maybe where some people might say, or I could say above 35% is where some might say that's where it starts being higher implied volatility, meaning pricing of the options should be a little bit more juicy. Okay. Now, given this, oh, look at that. Cameron did a video recently on whole moving averages. Excellent. That just fits in very nicely. Those of you that want a little bit more information on those whole moving averages. Yeah. Yeah, Bruce says GE traded at $8 per year, and then it had a 3 times reverse split, and it did some dividing out of their components of their company. And so, yeah, it is something to take into consideration. But we're going to trade what we see now, because you're right. For years, GE was I don't want to say a dog, but it was a stock that really didn't perform that well. It just kind of was stuck in a range bound or going down for a long period of time. And so it's only been more recently, yeah, that we're seeing this kind of activity in it. All right. Would you think strategically? Well, I'll tell you what we're going to do strategically with this. We're going to be fairly conservative on this. We are going to use the November contract simply because I poked around in the weeklies and there really is not a lot of open interest. So we need to either go do the Octobers or the Novembers. Now, I spent more time in November because I wanted to be a little bit more conservative on this one. Okay, so looking at this, let's look at the November. Let's do 290, 280. 290s at a 35 delta. If we have 52 days before these options expire, maybe we can feel comfortable at a 35 delta or even a 45 delta. Okay, versus feeling like we need to go out to, say, a 26 delta, because really we've got quite a bit of time. So if we say sell vertical here, and let's go ahead and lock that in. 325 would be our max gain on this. So what? 675 would be our theoretical max loss. And what's the probability of success on this right now? About 59, almost 60%. And 60% is where we might say that goes into higher probability. Okay. Is it a good enough return for you personally? You got to decide that. Okay. Here we would be taking 3.25, our max theoretical gain, divide that by our max theoretical loss, which is going to be the difference in the strike prices minus the credit. Okay, so 10 minus the 325, that's where we get that 6.75. That's going to give us a 48% return. Now, that might be a little bit higher than what you're used to, but we're also selling more time. Okay, we're selling 52 days worth of time. Okay, if you wanted to be more conservative, you might sell the 280, but we're going to stick with the 290, 280 spread on this particular one. How many contracts can we do? Well, we can do 2 contracts here. Typically in this class, we will allow ourselves to risk $1,500 per trade. Okay, so in this case, we know we could only do 2 contracts here. And then we're just going to say, when we get the chunk of it, let's get out and on our way. It might take a little bit of time for us to get a percentage of gain out of the trade, simply because we're not selling something with 20 days worth of time. So the theta value is going to be smaller on these that are out a little bit further. These that say, for example, in November. Doesn't mean it's bad. It's just kind of the way that it is. Let's create an opposite order here. And if we get a chunk of 325, what if we can get on this one, because it's a decent amount, what if we get 70%? If we get 70%, only 30% is left, so we'll multiply this value by 0.3. That says go buy it back when it's 97 cents. Not holding out to kind of flesh out every single little penny out of it. We're not doing it that way, okay? When I brush my teeth, I totally try to squeeze out all the toothpaste, but some traders don't like to do that on verticals. They'd be more content to say, let's get most of it. It's really hard to get all of it. You have to hold out till the very bitter end and hope it expires worthless to get everything out of it. Sometimes that puts you at more risk than maybe what it might be worth. Okay, let's go ahead. GE has earnings in 21 days. That's a good thing for us to check. And let's see right here, 10/21. Yeah, they're going to have their earnings. So yeah, right. You've got it right, Sharon. Our ideal might be to be out of the trade by earnings. Okay, on this particular one. There'll be other trades we do specifically for earnings. Let's go ahead. We're going to hit confirm and send. We're going to put this in our option strategies bucket and take a look at another chart. Now, these next few trades we might go through a little bit faster. Okay. Here is one I wanted to have a little bit of conversation about. And I want to have your input here. All right, we've got LRCX semiconductors. Some of the semiconductors are really doing pretty well. They will have earnings maybe roughly October 29th. So we've got a month. We've got maybe 30 days to be in this trade where they announce earnings. It went above the 10-whole moving average. Okay, did that actually yesterday, but today it almost, I should say the 20, and it almost made it through the 10, not quite. Okay, the MACD did roll up. Okay, it didn't cross the 0 line, but it switched direction, letting us know that the momentum was shifting. So depending on how many pieces of evidence you want to see, you could make a decision there. Now, yesterday technically was the Cajol day. Closed above the high of the low day here. Today just had kind of a little bit of continuation, not a ton, but a little bit. If I were to bring this one up in the watch list so that we could see where it is, it's been up 38% in the last month, which we can see, man, yeah, it rallied really strongly, up 35% over the last 3 months, which if I kind of zoom out here, 3 months on this, September, August, July, you say the end of July. It's kind of down in this range here. Somehow that doesn't seem right to me, but maybe it is. What if we go 3 months here and we say, okay, from today's candle back here to this first candle 3 months ago, it's saying it's up, yeah, about 34, 35%. Okay, we'll take it. Think this would be a big mover or a small mover? Okay, I have constructed 2 different trades for us, and I'm going to have you vote which one you think you might like better. Okay, on this one, because the numbers are there, we're going to use the October options, although generally many traders might say it's out of their window. Many times they'll go 20 to 40 days worth of time. They need to go out 50, they will. This is actually below that. This only has 17 days worth of time. We're going to line up two trades here. First trade we're going to do is the October 133, 135 long vertical. We've got plenty of open interest sitting out here, so there's no worry about that. So if we say buy vertical, and then we're going to spread it out by an extra buck here, go 134. Then in this one, it looks like 108 is what our max theoretical loss would be. That would be our net debit. What would we have to gain? We would have to gain $2 minus 108. So we're looking there about 92 cents. Okay. Some of you might say you like it. You might say you don't like it. It's fine. Everybody can have their own opinion. How big of a move do we need this stock to make? We need it to go beyond 134. Where's it sitting right now? 133.90. It needs to move 10 cents and stay there over the next 17 days. That doesn't seem like it's asking it to do a lot. 10 cents. Okay. The second trade that we might consider here, we'll do a blast all, is maybe something a little bit more conservative, coming out here to the November options. And on this one, looking to do, see if this still makes sense, 130, 125. Actually, let's go 125. It's moved a little bit more than when I was lining this up. Let's look and see if we say sell vertical here. It's a $5 wide spread. We bring in a $1.45 credit, which is going to be a fairly healthy return on that. Let's see how much it is, because sometimes that may help you decide what you might like better. Okay. So let me use a little bit of scratch pad here. I'm just going to kind of move these down here. So 145 would be our max theoretical gain. So 5 minus a $1.45 is going to give us our max theoretical loss. That's going to be $3.55. We're going to put that as the max loss, and 1.45 is the max gain. Okay, let's see what kind of a return that's going to give us. $1.45 max theoretical gain divided by max theoretical loss of $3.55. That's about 40%. So we're going out a little bit further in time. Gives us about a 40% return. Now I'm going to calculate the return on the long haul vertical. Okay, this one, 0.92 is our max theoretical gain. Let's get my mouse in there. 0.92 divided by 1.08, the max theoretical loss. It's about an 85% return. Okay, this one, the stock has to move. And I'm just going to write in here about 85%. Okay. It has to move 10 cents on the long vertical. It just needs to stay above what? 125 for the short put vertical. Where's 125? Well, 125 is about right there. So it has a little bit of leeway. Looks like maybe a couple of weeks ago is down priced in that area. Looks like that may be an area of support as well, because that looks like maybe where it bounced. Okay. So I'm going to have you vote. Is your preference trade A or trade B? Trade A is the debit spread. Trade B is the credit spread. Okay, you guys vote. Let me know what one is most appealing to you based on what we've talked about. Okay, which one is most appealing to you? And I'll tell you, I'll just do some position sizing here while I wait for your answers to come in. Because our risk is 355 on the credit spread, we can do how many contracts? We do 1,500 divided by 355. We could do 400 contracts. We're going to slide that decimal over. Okay, we could do 4 contracts here. On this one, we have $1,500 that we are willing to risk on any trade. And in this one, we would be risking 108. So we divide that by 1, divided by 1.08. Well, that didn't work out so good. Let me clear that out. 1,500 divided by 108. We could do 13 contracts. Okay, so very significantly different time frames. Okay, let's see. Alan likes trade A. Let's see, we've got A, B, B, A, B, B. Credit spread, which would be B. Debit spread, A. You guys are kind of evenly split on this one, aren't you? Okay, we're going to trade both of them and we'll compare. We'll compare how they do to each other. We'll keep track of them and we'll just do both of them. We're going to do 13 contracts here, 4 contracts here. Normally, you're not going to do both of them, right? Normally, you will pick one and do it because we're doing an experiment here on it. We are going to place both of these, okay? And one answer wasn't right, one answer wasn't wrong. It's many times going to be personal preference, how you interpret the charts, what kind of a move you think the stock's going to make. And so your interpretation and your estimation of what you think the stock will do can be different from then what I think it might do or what your neighbor might think it might do. All right, we are going to track both of those, okay? Appreciate that discussion there. Now, I hope that you become a subscriber to our Trader Talks channel. It makes it easier for you to find our content if you have subscribed. And let me just pull this up here real quick. We have playlists, so you can go back and check out our classes. Your look won't look like this. Come on. Let me just do something here. All right. There we go. There's our Trader Talks channel. If there's classes that you're like, oh, you know, I want to go back and check out that class or I missed it, great. Come over here, find the playlist, go ahead. You can find that class. We also have some additional playlists for you. One I'm going to point out to you is called this bite-sized content, which are videos that are less than 10 minutes, where you can learn just a little bit of something. Okay, so last week Kevin did one, or I guess yesterday Kevin did one here on sectors of the NASDAQ. And then I've been doing a series of quick tips to use Thinkorswim, how to do certain things. And this week, I've taught you how to do grid charts, how to set those up, develop them. And so if those are topics you're interested in, then you can do the short little video. Okay, very good. Cameron, I appreciate your help in here today. They were pretty nice to you. They didn't make you work too hard, which is just fine. But I do appreciate your input here today, guys. So a couple of things, if you haven't subscribed yet, go ahead and do that. If you want to follow your favorite presenters on X, I'm going to encourage you to do that. And then today specifically, we've got that survey, and Cameron's posted that out there a couple of different times along with that playlist for the bite-sized content. Thank you for doing that, Cameron. But again, we always appreciate it if you fill out the survey for us. I will read every single thing that you put down, and so do our managers, and we pay attention. I like to incorporate things that you're interested in or are having a problem with into our upcoming sessions, okay? So take advantage of having that real estate to do that. Okay, you guys, we're going to turn you loose. Tomorrow morning, we'll have Trader Talks bright and early right at the opening bell, 9:30 Eastern. Kevin Horner will be there. I think he's doing that one solo. And he always does a fantastic job analyzing the market, seeing what's going on. So have a great evening. We'll look for you tomorrow morning at the opening bell. We'll see you then. Bye-bye.